Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, August 1st, 2025. So, as we kick off the first trading day of the month, I wanted to just give you a quick update. We have some pretty decent sell signals. Like I said, been waiting for what seems like forever and a day for some half decent sell signals to make a case to increase short exposure. And we've got them, as I've been highlighting recently. What I was wanting to see happen, we have actually a couple things. We had the trend lines break. I gave you these charts. This is NQ, the NASDAQ futures. I'll give you QQQ in a second. I gave that I was using the 2 hour candlestick, I believe, on the last few, and telling you a sell signal would come break below this trend line. We have it. Regular trading session is in play. So it's and you don't have to squint to see it. Again, we're clearly below that minor trend line there, coming off that big divergent high. So check, check, check. And let me show you QQQ. Oh, before we do that, let me show you the bearish engulfing candles we got yesterday. I noticed on the all the indexes, or the majority of them. So this is my QQQ daily. I'm sorry, guys. NQ, NASDAQ 100 futures. Almost the same thing, except you're seeing round the clock trades here. And if you look nice and tight, not only there's that same minor uptrend line waiting for the sell signal. Came late yesterday, and with the two big reports last night, Apple and Amazon, and then of course the employment numbers today. Figured let's just see what happened today, if it's because that could have been whipsaws. So today, this is it. We don't have to squint. You can see that breakdown. Again, this is the same one I just showed you on the 60-minute chart. But let me zoom in and show you the bearish engulfings that I noticed yesterday. Right here, we've had several in the last. Well, not on the indexes, so many, but on some key stocks and all that, and they didn't pan out. But the day you stop doing what works. Remember, everything is about probabilities. You can have, you can take 100 breakouts of your favorite chart pattern, and you're never going to have 100 of them play out to hit your price targets. You're going to have a certain amount of failure rates. It all depends on the pattern, market conditions, the security you're trading. But either way, I just wanted to state that that's it. That candle yesterday, again, I'll come in a little tighter. You can see engulfed the previous 1, 2, 3, 4, the bodies. That's what you're supposed to do in a bearish. It's the body, the fat part right here. Needs to engulf the bodies of the previous candles, which you wiped out in one day, 4 days of candles. So it was some nice price action. We did take out the trend line yesterday, and so it's kind of an all clear moment today, in my opinion, to short. All right, QQQ, let's get that. Same thing, nice big fat bearish engulfing. It's the same trend line I gave you before. You have this minor uptrend line. This is the chart I was sharing this week. Broke down. Again, this was all pre, most of that was pre Apple and Amazon. And now everything's out of the way. We've got the Fed out of the way, even though the rate hike chances just shot up to 75% this morning with the big revision on employment numbers. That's what I was waiting to see. Employment to me is bigger than anything right now, bigger than GDP. It's everything. And if you follow the media, financial media, you've heard that they have a lot of they've been imputing a lot of the data, meaning kind of make it up, guessing, due to labor, job cuts in the government sector, including the BLS and other government agencies. So they're kind of taking wild guesses, and those guesses, just due to the nature of imputing trends, if you're not familiar with this, in an in a uptrend or in a strong job market, low unemployment, it's going to skew to that side. So the risks then are to the downside, because once things turn, again, they don't have all the data that they normally have in the surveys and all that. Participation rate's been low, so they just take guesses based on the current trend, which it leaves sets the stage. And again, I've been on that, not even wavered on the recession coming soon this year drum for a while. And even recently it was in a very tiny and ever decreasing, or I should say increasing minority, as just about every brokerage firm and mainstream pundit out there has been saying no recession this year. So we'll see what happens. Continue to watch those trends. But see, today was a good example. I'm trying to talk to you about the revisions from the previous numbers. That was more so than the miss on the employment numbers that came out today, was the revisions to the previous month. So that's it. Again, you don't have to squint. This was all what I call, take it with a grain of salt because all the big earnings and all that now, it would take just to kind of put it this way, sometimes I look to rally and get back and make this a false breakdown. Remember, you don't go straight up in one tick. This is a 60-minute chart. You could look at it as a daily. You're gonna have to go up at an angle here, even if it's a strong rally. You're gonna have to pump this market about 4% from where we're at right now to regain. Again, you can see it here nice and clean. There's the daily chart. You're going to have to pump the market about 4%, or they will, just to even back test the trend line. So to say that it's clearly been taken back and this was a false breakdown or whipsaw, you're talking about a 5% turnaround. Anything's possible, as I often say, but I don't speak in possibilities. When I trade, I factor everything in probabilities, and the probability is very low. So that opens the door to these targets I gave you here recently. These are just near-term targets, and nothing's changed and hasn't for a year now. My long-term targets, Seaboard 8 for those targets, and that's it. So if you're new to the site, it's all back from here. We put in a top. I said it was likely going to be the top, and with a, we could have a marginal new high, and that's what this market's done. These are very marginal relative to the scope of the move, calling for a back there, a drop of 50%. And from that point, from that previous high last year in 2024, we went up 10%. So that's only 1/5, well within any reasonable, again, not that it's a single trade. You guys know me, even on my long-term positions and what I, throw out on the site, what I'm doing. And, we covered and reversed on these instances to gain bounces because the odds were very, very likely. And so in no scenario do you go down 50% in the stock market or in a major index like QQQ. It's always this. You hit the first couple targets, you bounce off T2, hit T3, had a bounce, carried a little higher than I suspected, but not within the realm of, still that marginal new high. Now look, okay, so we're down today. We broke those 60-minute trend lines and those minor trend lines on the daily. The big things come when you go back to this chart here, the one I had right here. Sorry, that was a weekly. This is where things get really interesting, and the odds will sharply go up, as I've been saying here. Odds for my longer term targets on that weekly chart I just showed you will increase exponentially if and as QQQ drops down through this range. Even when it gets into that range, you're going to really start spiking up. And the reason is, among other things, look ahead. How are the weekly charts going to look? The monthly charts. I'll cover all those later. The month will be finalized today. I'm sorry, the month was finalized yesterday. Today's the first. But the weekly charts are going to be finalized today. So I'll give another follow-up. I do have family coming in town this afternoon, guys, so I may not get anything out to you after this afternoon. So we may pick this up on Monday. But again, I'm giving this now unless, it's check. Across the board, all in, heavy, aggressive, more aggressive shorting moment, certainly than before. And, you have the near-term targets. You can, you want, like I said, I'm not looking for a quick 2-3% pullback. If you are, these are all support levels. If you're looking and you're one of the, and there's a couple here, and that's fine. I think the market's going a lot higher and every dip's going to get bought. These are all support levels. These price targets for short sellers are where reactions are likely. T1's a zone, meaning my degree of confidence is exactly where the reversal is. Usually I'm pretty precise with where, things reverse and bounce. Those are the single level targets. Zones are more of a range. And so that's it. So if this breakdown sticks, another way to say that, before all is said and done, before we, have a, substantial, meaningful rally, 5, 6, 8% or more, we're probably going to come down to this first target zone, which would be about a drop of 6 to almost 8%, 6 to 7%. That's it. It's a relatively small range off the recent high. But again, bearish engulfing candles, they're super simple to trade. You look for them only at the end of a prolonged uptrend. So I could be wrong, but I believe this is the first one on QQQ that we've had since the last time we had one was on the weekly chart I highlighted all the way back here. I highlighted that for you and said the same thing I'm telling you right now. You can short right there, take a short with a stop above that candle, because if you take it out, it's no longer a topping stick. And look what we have here on the weekly as well, a bearish engulfing candle. Remember, the body, the fat part, is engulfing the body of that previous candle. So it's the same strategy. You can short it now. For a longer term, if you're trading the bearish, now if you're trading this breakdown, maybe you're an active trader and you're just going for short-term pullbacks based on the 60-minute charts or some of these early targets here on the daily chart, right? And that's based on that. However, if you're going to short a bearish engulfing candle on the daily, even the weekly, which we currently have, again, the weekly candle won't be finalized until today at the close. This candle on the daily was finalized yesterday. And so, again, it's the same high. You have a stop there. You short the bearish engulfing candle. You put a stop slightly above it. And you're shorting based on in candlestick charting, candlestick pattern analysis. This is a topping stick. Just like a bullish engulfing candle that we saw down here when the markets bottomed right there was a bullish engulfing candle, is a bottoming stick that came at the end of the bear market as highlighted back at the time. So my point being, you're calling a major trend reversal, or at least attempting that. And again, all right, you've heard it from me. I've showed you plenty of shots to take on short trades along the way. On the way up here, after we went long, we started covering and shorting, and that's it. So the thing is, there are no guarantees. Nothing's close to 100% in trading with any buy-sell signals. But it's super effective, because if you saw the bearish engulfing and you shorted it, you're giving yourself about a 2% loss potential on that trade if stopped out. And your downside potential, again, if you do see things the way I see them, is up to 50% or more. That is a absolutely phenomenal RR. Now, given along the way, there'll be we'll be covering and reversing if things start to play out that way. Here's the weekly chart, by the way. I just wanted to reiterate again, if you're just catching up, that was the primary uptrend line off the 2023 lows. Really was technically late 2022, but we had a major bottom there in 2023. That's where all the big techs started going. Mag 8 started rallying. And that was simply a breakdown and a back test. So, again, nothing's changed in the longer term technical posture nor my outlook, because this was just a breakdown and a back test. Sometimes you break down, you never look back. I mean, you always look back, meaning have a kickback rally at some point. But sometimes when you break a major trend line like that, what I was saying is sometimes you'll back test it and then get the bigger leg down. And sometimes that's it, and you don't get a back test. And there's no way to know. All you can do is, if you see it forming, did anything change? No, this was a breakdown, simply a back test. We've been back testing. And as I say, the problem with shorting backtests, that's why I've preached kind of partial position conservative lately on shorts with the, any sell signals that we had, or any reason, shorted the semis recently and all those, is I like to see the problem with backtesting is you can continue to backtest an uptrend line. You're going up. It has a positive slope. So what I like to see is an impulsive rejection following, whether it's on the initial backtest or weeks of backtesting, or even months, depending on the time frame. Again, this is a weekly time frame. So I'll leave it here. The redder, the better today. So if I don't give you another update today, QQQ is down 2%. Should we close down 3+% today? All the better, and all the more reason to go home short for the weekend, in my humble opinion. As always, you do you, I'll do me. But this is what I've been looking for and waiting for. We've got it. And I told you I wanted to get through the week, see how all these earnings went, and all the heavy economic calendar. This is SOXX semi. Somebody asked yesterday. It was a throw out to, hey, is anybody else short the semis? I'll give you SOXX as a short here recently on the breakdown, but said the next, or an alternative entry, either an add-on or an alternative entry, will come on a break below this level right here, the recent lows, or the lows that day after the breakdown, is what I said. Yeah, because that was key support. I said traders will be watching that pivot low, and you see they bought. It was support yesterday, intraday breakout, closed on it. Boom, there's your sell signal today. We're down well below it. You don't have to squint to see it. Now, again, the day is young. By 4 p.m., should they do this and ramp it back up? That's going to be a pretty powerful whipsaw. Is it going to change the technical posture? No, because we had a beautiful, as I said, beautiful textbook bearish rising wedge. What makes it beautiful? It's so well defined, steep, just, it looks straight out of a textbook. Breakdown, and again, sometimes you break down, don't look back. Sometimes you'll go on and back test. You don't want to see a back test because it's a steep uptrend line. So on this one, to ride out a back test, remember, you don't go in single day straight up there. That'd be 15% or something probably. You'd have to zigzag up, and by the time you got there, so at this point, you can see these recent highs. Again, your stops are going to be commensurate with your price targets. Some people go for higher, more aggressive targets. This was the last trade we did. We shorted them back here, same kind of setup, rising wedge, breakdown. We hit my first, second, third, fourth, fifth, and final target there. Reverse, that was also the April lows where I said cover all shorts, go long. And now we have, it's a wash, rinse, repeat scenario. It's the same kind of pattern. Nice, clean, bearish rising wedge pattern, right? There's your uptrend line, divergence line, breakdown candle last week, follow through candle today. So we'll see. And like any trade, it either pans out or not. So that's what stops are for. And again, your stops are going to be relative. I think I might have, yeah, there's the latest targets I gave you. That's right. I gave you these either on the daily, what is that, board 7? Let me just click my boards here. No, must have been on the weekly. Okay. Yep, these are the ones I shared with you recently on SOXX, the semis. So there's the breakdown coming up on T1 right here, which is at, let me move this over to about 229.60. You want to cover a little bit above that. That's the first likely reaction point. And you can see the other targets, T3 and T4 zones, T5, T6. If we get down to T6, we're probably going lower. I'm just going to tell you that right now. I mean, it's a, that's a 40% drop. But based on that, when I go out to the long term, the monthly chart, this is my monthly chart on SOXX. And, back then, I guess that was what on, you can see the pop-up box on March 9th, 2023. I said minimum target was a trend line. I haven't changed that annotation, or it would have a change there. Where was that? Was that March of 2023? And there it was. Boom. Trend line was hit perfectly. So that's, swing and trend trade. That's more of a trend trade. Call down, hit the primary uptrend line, cover those shorts, go long. And now we have some sell signals on the daily. We also have these long-term indicators here on the monthly. Still bearish, at least the PPO histogram being negative. We're still coming off that big divergent high. And that's that. All right, I'm going to wrap up here, but I usually get questions on the VIX. Remember, I'm pretty clear on that to be bearish and short the stock market is to be long and bullish the VIX. The VIX is just, they have those leverage ETFs out there you can trade. If you want to short QQQ without, you can short it, of course. QQQ, go short. Or you can buy PSQ, which is the non-leveraged short ETF. You can juice it up 200% with QID, 2 times leverage. Or you can go with SQQQ and juice it up 3 times. Or you can go with just TVIX. And I know the VIX tracks the S&P 500. I do know that. And they do have a VIX volatility index. I'm sorry, a NASDAQ volatility index. But the liquidity is in the regular VIX. So, and that's it. So TVIX or VIXY is non-leveraged. You don't need the leverage because the VIX will always go up, almost always go up in a multiple of whatever the indexes drop, especially during the strong corrections. There's the daily chart. Remember, you're going to get decay on this one. It's not a buy and hold instrument, but you can see beautiful little wedge breakout. This is just a textbook bearish rising wedge. Excuse me, guys. Tripping over my tongue this morning. Divergent low, just like we went long right here. Pre-breakout on that divergent low, and just like we went long right there, both official trade ideas. With my final target right there, we hit my second target there. I still maintain T3. So just to give you an idea how much upside potential, that'd be about 100 and, roughly 170%. And then VIX, remember, you're going to have decay. VIXY or any of the VIX instruments are not buy and hold. They're kind of get in and get out. You want to get in But you can't wait too late. When they turn the corner, this is the spot VIX, and you can see right here again, divergent low, explosion. Divergent low, explosion. We were long on all these divergent lows, and right now we should be long. I'm long VIX because we just had some nice sell signals today. So that's it. And again, you already have the, VIXY is the proxy if you don't trade futures. If you do, let me know, and I'll give you those chart there. But this is it. I'm just, I like the market. I just keep moving the lines. It's kind of like football. If you guys watch, of course, most of you watch football, U.S. football, American football. You get a first down. What do? They pick up the first down markers and they move it. You get another 10 yards, and you see them on the sideline, the chains. They move the chains, it's called. And so I've been moving the divergence lines, and that's it. And divergence, as I always say, is not a buy signal. What's a buy signal? A breakout above resistance, just like a breakdown of below support on the indexes was a sell signal today and coincided with that. Or you can have buy and sell signals based on bearish engulfing candle, or I'm sorry, bullish and bearish candlestick patterns. There's many. They can be single day, multi-day. There's different types of patterns. But that's it, guys. Just another check mark. That's all I wanted to convey to you is the check marks I've been waiting for there. And so being that I've been warning of a potential crash-like scenario, swift move down in this market for the last several weeks based on sentiment, my low volume indicators, I told you I went through the components, the NASDAQ 100, the top components, looked at short interest with many of those stocks at or below, at or near new 52-week lows and short interest. All that leads to what happens is institutions and individual investors, there's a lot going on here, guys. There's the meme stock bubble that will pop. A lot of those traders, with no offense, don't know what they're doing. They jump on and just buy because someone else says buy, and it's a recency bias thing. They start getting clocked in this type of market. Those meme stocks will usually, if not on the first day after it's become clear the trend has turned, they are also tend to be leveraged up a lot, trading on leverage, and that works great in an up market. Your count's going up. You have more buying power, you buy more stocks, you put more into the meme stocks, and then it goes the other way. When the market drops, these folks start getting margin calls. So even though they might believe in their meme stock or their NVIDIA or whatever they're trading, and they want to hold it and ride out the pullback or add more, they can't because they get used to be in the old days when I started out as a stockbroker, you had to give your clients a phone call. Tell them, hey, I got a margin call. You got to send me some money, or you have back then they give you more time to do it too. We had more leeway. Now it's most trading's electronic with online brokerages, and so you're going to get a little pop up on your phone or your computer, or not. It doesn't matter, and most brokers will blow you out. So that's where you get, if you're wondering where these things come from, when the VIX just goes like this and the market suddenly drops and nobody sees it coming, or very few see it coming. That's what it is. It's that under the hood dynamics of the market. Again, low short interest, high margin balances, extreme bullish sentiment, which also means lopsided trading. You have very few shorts. They've given up. Very low short interest, and everyone's long. When everybody's long, there's nobody left to buy. And when you've blown out all the short sellers and they've given up, they're I always say this, the only guaranteed buyers in the market. This is one thing I've said for years. You can be the most ravenous bull, foaming at the mouth, bullish. I'm going to buy NVIDIA every dip. This market's going up, just buy the dip. But guess what? For whatever reason, when there's a dip, you don't have to buy. You may have changed your mind. Something may have come up in your account that doesn't let you buy. You're out of buying power, or just whatever reason. So being bullish in rhetoric is one thing. A short seller has absolutely no option. They must cover that short position. They must buy to cover when they cover it. So I always say they're the guaranteed buyers. And so when a heavily shorted stock, what happens when the stock starts dropping, they take profits. But when they're blown out, you don't have those shorts covering. And that's where these quick drops come to. From normally each of those support levels are where various short sellers are going to book profits. So when they're gone, then or really low short interest. And again, it's just a a what if. I don't want to get too far ahead of myself. This is one day. We've seen plenty of sell signals in the last couple months, or not a lot, but a couple on the market that got bought up and didn't prove to be it. I'm just throwing it out to you because if it is, like I said, probably my guess would be Monday hammer down, gap down on Monday. It's the nature of these type of markets. It's from my experience. When you get a really hot one-sided trade, it doesn't let the longs out in a nice way. It's pretty cruel to them. So if again, we'll see where we close today based on support and all that. But I'm going to end it here. And so if you're actively trading or you're somewhat risk averse or suspect of this breakdown, think it might not stick, then you might want to close out any positions or keep things light into the close today because we have a weekend coming, 2 extra days overnight risk. If you're swing trading, have a plan. Your plan doesn't have to be mine. Your plan may be to buy dips, whatever it is. But if you are shorting based on the bearish engulfing candles and the trend line breakdowns, that's dual sell signals, then stick to your plan. Again, it's a weekend. You might not want to go crazy short, even though these are pretty nice sell signals. You could always add next week, especially if you get a objective reentry. Where would that be? Well, backfill the gap, number one. Traders love those gaps. You go to 60-minute chart, any time frame you want. You got a gap right here. You're at support right now. So as I'm doing this video, we're coming up. We haven't. Yeah, it's close enough. I'm gonna. Whatever, I'll just leave my line there. If you look really close, here's how I would do this. I see 1, 2, 3, the most recent reactions right there. We just kissed that level. So I can tell you, as I'm doing the video, this is the first place that I would expect them to buy. And actually, I guess they did a little bit. There's a little reversal. But for me, based on the powerful breakdowns that bearish engulfings yesterday and what's happening today, it's a bounce that I normally would game, but I don't care to game. And we could go up. And if we go up, I have plenty of dry powder. Backfill the gap would be objective. Or even, look, it's not even a backfill the gap. There's the gap. This is the bottom. That's the top. This is my guess. That's all you get today. And you'd be lucky if you get that. And you might not even get that. But that would be objective level 1, objective level 2. Beyond there, I would just sit tight. I wouldn't keep adding because at that point they might want to run it at for a back test of the trend line on QQQ. So there's kind of my preferred scenario, or maybe partial or close to that gap, and we should be here. If I'm reading this right, probably on Monday be down here. That's going to be from yesterday's high, a drop of about 6-7%. And then again, if so, then what will that do to the weekly chart? Let's see what happens today. This is a weekly chart. Again, if I have time today, I can take a break from visiting family. I'll do a post, a market update. That's it. This is my weekly chart of QQQ here. I already had it marked up. I already covered that for you. All right, let me stop here. Saying the same things over and over. And then anything else that stands out, as I told you in yesterday's video, if this market can rally up and hold up, yeah, especially into next week, I'll continue to hunt for more long trade ideas. No matter what, I'll also continue to hunt for more short trade ideas. Basically, I throw out the best looking trades, especially in a market like this, long and short. You decide which ones to take. There's nothing wrong with. I like a long short portfolio, and especially, we start taking out the 200-day moving averages and getting down to where I think market will really start to crater those levels I gave you earlier. That's when I'll often move to a 100% or close to a 100% short portfolio, not have any long side hedges or again, I wouldn't call them hedges. I'll trade every stock on its own technicals. Unless we're in, get down here, we're going to be in that waterfall type selling mode. We got a long way to get there. It's not going to happen today, tomorrow, probably next week. I just want to let you know. So I'll continue to hunt for trade ideas and get out a mixed bag. And that's just the equity. I'm only talking equities in this video. Remember, equities are and should always be, in my opinion, a piece of a big pie, whether it's your long-term account, 401k, or your trading account. And that'll have equities, whatever that number is to you. Let's say it's half your portfolio. And then commodities. Within commodities, you're going to have precious metals. You're going to have agricultural commodities, long or short, doesn't matter. Fixed income, crypto. Again, not at every point in time. An investment account, a long-term account, should be more diversified like that. Trading account, again, those are just some of the things. And don't hold me. It's not. Sometimes I might be pushing closer to 80-90% equity, long or short portion. Sometimes it's very low. I'm focused more on trading gold, silver, Bitcoin, or some other treasury bonds. Right now, I'm just staying clear of treasuries. I've told you for a while. I haven't engaged. I'm just watching those closely to see if they break out to new multi-year highs on yields. All right, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.